I think Joe Powell certainly has gotten the message that he needs to be striking a little bit more dovish tone. He's gotten the message because not only has the president just said it, as you saw in your clip, but I think if he doesn't do it, the market's certainly going to not have a good day because the market's certainly been pricing in the idea that we're going to start seeing the Fed start to cut rates. I think it might be a little premature to think they're going to be doing it today, but I think he totally understands that he will be disappointing everybody if he doesn't strike a more dovish tone.
Yeah, we know from CNBC's Fed survey that basically not many people expect a move today. Not a cut, certainly not a hike. But that doesn't take away the drama. If the Fed comes out, for whatever reason, a little more hawkish, a little more likely to raise rates, does that send equities here lower?
Oh, yeah, investor beware. I mean, the market clearly is, pushing in the other direction and thinking that we're going to start seeing rate cuts. And we've seen that this week in the market. I mean, look at the way the market's kind of really, as you just reported, rebounded dramatically over the last couple of months and certainly since the beginning of the year. And a lot of it is being fueled by the idea that the Fed's going to keep the party going and not take the punch bowl away.
Yeah, it is sort of that adrenaline shot. I guess there is maybe a downside, though, Ken, because theoretically, if the Fed is either cutting rates or talking about cutting rates, they see something down the road in terms of a slowdown that they are trying to head off. It's not just good news if they're dovish.
No, actually, I think that they should really be holding off past July, where a lot of people think we're going to get a cut. I mean, the reality of it is a lot of the slow that's happening is coming from the president and his political stance on trade wars and border wars and all sorts of things like that. And all those things can kind of go away with a tweet or the president, just deciding, okay, we declared victory on some other minor thing, calling that a major victory, and then it goes away.
Let's not forget, the market was giddy because of that tweet about, we're going to have a meeting. But also yesterday, the president talked about the possibility of slapping tariffs on Germany. So it wasn't like it was all great news on the trade front yesterday.
The problem is we're all starting to become insensitive, we have been, to these presidential comments because we don't know whether they're just part of his re-election bid now and it's just playing to the base and saying what he needs to say because a lot of these things turn out to have no teeth. But the thing that really concerns me about the Fed moving is the slowdown or the perceived anticipated slowdown, because we're seeing nascent signs of it, but it's not really taken hold yet, is that we're going to get this at the end of the year, and if we don't have a trade war, if all of a sudden we're all warm and fuzzy again with China and Mexico is declared doing great things on the southern border of Mexico and all that, I mean, the anticipated slowdown might exactly turn around to having the wind at our back. And then if the Fed had already cut, they're going to have to go the other way. And what does that say about the stability of our decision-making process? If, okay, the wind blows this way, the wind blows that way, we'll change, because the Fed's mandate is not to keep the stock market up.